Alright, good evening and welcome to a brand new show of Markets Tomorrow, and finally something to look forward to tomorrow. Markets have made a comeback, impressive comeback from the day's low. Nifty has appreciated by a good solid 200 points. Short covering for the moment, yes. Will we see follow-up buying? Well, Wednesday will tell us.
Wednesday will tell us. In fact, over the next 30 minutes, we have ample voices to make sense of the markets. It's been an extremely volatile session, but on balance, like Nikun said, we came back and we came back with quite a bang. Taher Badshah of Motilal Oswal AMC and Sandeep Wagle will put the markets in perspective. Remember, this is a liquidity-induced rally that we're seeing in the market, sentiment-driven as the Chinese central bank went ahead and cut rates to support the economy and cut the reserve ratio to infuse more liquidity, thereby supporting the market. So, clearly a move to stem the fall in the Chinese market and to, in a way, alleviate concerns with regards to the Chinese economy. But actually, rather than doing that, I think this move has been a bit counterproductive, because now everybody worries about the China situation a lot more in terms of what is happening on the ground.
So this is more like a bandit approach. It'll sail you through for next 4-5 days, maybe a week or so. But by cutting rates, productivity does not come back. Exactly. And the biggest example in front of us is what is happening to US and what is happening to European Union. The fact that the world's second biggest economy is slowing down, it is slowing down at a rapid pace which world was not expecting, I think will be a pain point. But when it comes to India, I just get a sense that today there was definitely some element of value buying. LIC, we heard, was a big buyer in the market. Individual stocks have done rather well. So we've always been, we've been arguing from last 2 or 3 days that, look, in the short term, since all markets are connected, Indian markets will also get whipsawed. But eventually when the smoke will clear, Indian market will really emerge as winners. Today, since market conditions were extremely oversold, markets did manage to bounce back. I think in the next 2 or 3 days we'll figure out whether we have a trading bottom in place, or today's price action will only be considered as a day of short covering. Bear in mind, Tanveer, that we have FNO expiry on Thursday. So ahead of expiry, these pull and push pressures were always evident.
Oh yes, indeed, and that's what's added to the volatility. But it's been a decent comeback. There's no taking away from that. In fact, just be mindful of what happens in trade tomorrow. We're going to be drawing cues from the US markets, but the Nifty has closed up about 1%. The broader indices have closed up about 1.5% to 2%, and the Bank Nifty has made a decent comeback. I think the levels to watch out for, as our technical guests put it, is particularly 79.50. If the market actually trails past that, then maybe the short covering rally would be seen as one recovery that would sustain. However, the jury is still out on that. Let me get in Sandeep's perspective too, who joins in with his technical calls. Sandeep, how would you prepare investors and viewers right now for the markets tomorrow? Yesterday was the big crash. Today has been the big comeback, of sorts. Volatility still remains high. What happens next?
Good evening, Tanveer. I think what we have seen is a hammer pattern which has been made. Now, hammer pattern generally at market bottoms is quite bullish. And if the low of the hammer, which is today's low, is held on to for the next few weeks, the bottom seems to be in place, or the bottom may have been made. But having said that, I would want a close above 79.50, a convincing close above that. And then one can conclude that we are in that 77, 8,000 range. The worrisome part is that we have made a lower bottom. As far as the weekly pattern is concerned, we have very convincingly broken 79.40. And even if there is an up move in the next couple of days, maybe towards 8,000, 8,100, probably even 8,200, that will have to be termed as a bounce back move. And again, selling can emerge there. So I would not be in a hurry to say that the bottom is done and we are on the way up. Yes, temporarily, if you talk of the next few days or a couple of weeks, we may spend some time in the 77, 8,000, 8,100 band. But again, if selling comes, we may even break that and we may go down to 7,500 or probably even lower than that. So that is the worrisome part, and I don't think anything will happen till expiry. So we have the next couple of days where probably 7,700 may not be broken, probably 8,000 may not be broken, and we may have a sideways move in that 50-70 point band.
Taher, how should one read into today's price action? Bout of short covering stroke dead cat bounce, or we genuinely have a valuation bottom now?
No, I don't think we, have a valuation bottom in place. We've been a slightly expensive market, so and particularly in the context of earnings which have been not too great, I wouldn't really classify this as something where valuation is now bottomed out. But yeah, I mean, individual stocks have probably seen even larger corrections, and there are opportunities from that perspective, and that's what probably matters to us from a fund administration or the fund management perspective. So more than the overall market perspective, I think we keep worrying about individual names within our portfolios and whether they've become cheap or attractive from the point of view of resulting from the correction of the last 2 days. So I think that's what broadly is our focus essentially.
Taher, so what should be a very basic approach in this kind of a market? We can endlessly argue on paper that whatever is happening in the world is good for India. Crude is down, interest rates are coming down, liquidity will be strong. But that's long term. The problem is short term. The problem is that on a daily basis, we are staring at a 5 to 7% price erosion in daily stocks, in mid and small cap stocks.
No, I think just this last few days of volatility itself, in fact, bolsters the argument for a more medium-term approach to investing. You just don't really know what can probably, come and hit you from where, and there are some which are factors which are completely uncontrollable, and you don't even understand or you don't even know sitting out here. So that just bolsters the case for taking a more pragmatic, more longer-term view, if not the next 5 years, at least the next couple of years, and disregard the shorter term movement. So I would think we have to, the approach now or the effort now, at least from a fund management perspective, is always on trying to understand, to see if we can shield the portfolio to whatever degree we can, and bulletproof it from things which we probably don't have control over. Invest or keep very minimal investments in companies which probably have exposure to either commodities or overseas or whatever. These are typically things, at least as far as we go, we've not understood or we've not been able to get our hands around it. So the best thing to do is desist from having significant exposure out there, and try and concentrate on things which are within your control and what you can understand and what you probably will be able to make out if things were to probably go wrong. So I think that's the only approach that is can be tenable in this kind of a market scenario.
Well, I just want to look at some pharma stocks. Wockhardt, Ajanta Pharma, Strides, Aurobindo Pharma. At 11 o'clock, some of these stocks had corrected 8, 10, 15, even 20%. But what a comeback it's been for Wockhardt. From the day's low, which was way below 1200, it closed at 1321. Aurobindo Pharma at about 11:30 was down by about 10%. Let's look at the closing rate for Aurobindo Pharma. It made a mighty and a monster comeback. It closed in the green, 736 rupees. Sandeep Agle, what's going on in Midcap Pharma? Sandeep Agle, Midcap Pharmaceuticals, do you want to jump in?
Nikunj, most of the stocks, be it Auro Pharma, be it Glenmark, their weekly patterns were positive, and suddenly their weekly prior swing lows have been broken. But what we have seen today is that they have bounced from extreme oversold zones, and such bounces can be very sharp. I won't be in a hurry to judge that the bottom has been made and we will be on the way up. There can be some choppiness, but yes, at lower levels, talk of Auro Pharma at around 680, 660. That is an extreme oversold levels, and maybe if it is tested again buying will emerge. So in that sense, I would be positive, but I don't expect the top to be cleared. Like Aurobindo Pharma may not break the prior swing high of 820, 830. It may spend some time in that 700, 760 band over the next few days. But at lower levels, I would be tempted to buy the stocks. And if the Nifty does not break 7,700 again, then I think this is a sector which will outperform. But in case selling comes in again, you may get the stocks at lower levels.
Taher, you had pharma and IT sell off today and then they came back. Is that a good opportunity to buy into high quality names within these defensives, even consumer names for that matter?
Oh, definitely. I mean, you will keep within all these three spaces, you will keep finding a lot of opportunities, and I think they differ because there are quite a lot of complexities in individual companies, particularly in the pharma and the mid-cap pharma space. Therefore, so you have to the only way is to tread selectively in all these sectors, but then there are decent growth opportunities yet, and like as I said, these are sectors where you still can develop some good understanding of those businesses and not get shocked by parameters which are beyond your control. So I think in case of pharma, you have to individually assess the pipeline of products that the company has, probably a little bit of what's the domestic versus overseas mix, and of course the management. So I think you can make your selections. There is a wide basket of stocks which is available. They tend to move in tandem on short runs of the market, but I think you can pick and choose, and 2 or 3 are enough to be able to constitute a portfolio. And same goes in the case with even consumer stocks and even IT, given that there is an overall moderation in the IT demand curve, but then there are certain companies which are slightly better placed than the others. We have a lot of niche tech opportunities also which are emerging in the country, and they seem to provide good growth opportunities going forward. So I think there is a good amount of, if one does look around, there is a good amount of opportunities to be found in these three sectors.
All right, gentlemen, stay on with us. We'll head into a break right now. As we do so, hear out Hiren Ved and Shiv Puri, their assessment of the market situation and what they're making of this pullback move. Is it a dead cat bounce or actually a sustainable bounce back rally actually from the lows in yesterday's market crash?